Let me get your take on what's going on right now in China, because the world, certainly in the United States, markets have been nervous over the slowdown in China and the idea that China is buying less and less energy from foreigners. What is your take on the impact of the Chinese slowdown?
Well, first of all, I think what you see is that oil demand is actually growing a little bit faster than it used to. This quarter, we're looking at 1.4 million barrels a day of new demand coming on, partly also from China. But if you look at China per se, what is happening there in the equity markets is not translating into the real economy. So we do not subscribe to what is out there a little bit as a narrative that there will be an economic meltdown in the short term.
Oil is required for a long time.
Well, not only that, of course. Oil, energy, gas will be an increasingly important component in the mix in China. And I think China is making a long and difficult transition from an investment-led growth economy to a more consumption-led economy. There was always going to be volatility in that, Maria. And if you look at the fundamentals, I think we have to stop looking at the sort of supply side fundamentals of the Chinese economy, much more to the demand and consumer fundamentals, and they are actually strong.
All right, so you think that the demand has not slowed all that much, even though you're seeing a slowdown in growth in China?
No, I think actually what we see is an uptick in demand, and that's one of the parameters that you have to look at when you want to observe the near-term outlook for oil markets.
Of course, Congress back in session this week, voting on the Iran deal. What is your expectation in terms of when Iranian oil comes into the market? And is that a concern, that it's just adding to the global supply?
Well, I think the Iranian supply will start to pick up when sanctions need roll off. Let's assume that will be somewhere in the course of next year. It's a little bit hard to predict for an outsider because we have been out of Iran for a long time what will actually happen. A lot of talk about 1 million barrels of new oil coming on. Well, actually, the world is going to need 1 million barrels. That's less than 1 year demand growth. And on top of it, you see shrinkage in supply every year, 3 to 4 million barrels a day of shrinkage in supply at $60 oil.
All right, so the world will need more oil. What's your take on this other worry that I've been talking about a lot recently? As prices go lower, the shale players are leveraged. They will go bankrupt. They'll see more acquisitions. And in fact, that could mean more job cuts, more pressure on the U.S.'s labor story.
Yeah. It's certainly true that we see more pressure on that segment. The segment, of course, is still, has in the main this year continued to grow, but it's running gradually, in my mind, out of steam. It's running out of cash as well. So you see producers focusing on the sweet spots, as we are. I think we were a little bit ahead of the rest of the pack. We restructured that portfolio already in 13-14. Sold $3.3 billion worth of assets, shrinking back to really 4 core areas where I believe we have a lot of running room left. But also, we are paring back investment quite a bit because it needs to make sense economically. And, we can make choices. I put much rather my investment dollars elsewhere at the moment than in shale. So there will be pressure on that segment, Maria.
How much market share are you seeing, market share gains, are you seeing from solar, things like wind? I don't know. I mean, just anecdotally, I find increasingly when you can use solar, you're using it.
Yeah. I think market share will gradually grow over time. On absolute terms, solar and wind will grow spectacularly. It will be the fastest growing component in the energy mix in absolute terms, or in percentage terms. But it comes from a very low base. At the moment, looking at renewables, variable renewables like solar and wind is about a 1% contribution to the mix. And we're looking at an energy system that will need to double in terms of supply in order to meet demand. So yes, it will play a role. In probably 30, 40, 50 years' time, it will be a very material role. But at the moment, it's still at the margins.
All right. Final comment here in terms of the message you are going to deliver today to analysts at your Investor Day.
Well, very much, I think, also a repetition of the messages that we gave out in Q2 and before. So we are dealing with the current environment with vigor and with determination. I think the company is very, very strong, continues to be strong, can stand by its long-term commitments on dividend and also on the share buyback that we are going to work in 2017. The deal that we have done with BG is on track. And it continues to make sense, both from a short-term financial perspective, from a mid-term strategic perspective, and from a long-term makeover of Shell perspective.
And certainly, as a result of that deal, it becomes even stronger, that strength behind the dividends. Good to see you, sir. Thank you so much for joining us.
Thank you, Maria.
We appreciate it. Ben van Beurden is joining us, CEO at Shell. Coming up